Hey everyone, it's Matt, and this video is another Bitcoin update. So this is where we break down the market structure and I discuss what you should look out for over the next upcoming days. So a quick reminder, if you haven't joined yet, you can join my free public trading community down in the description of this video. And you also have a link for additional trading guidance as well if you're interested. And if at any point in time you enjoy this video and you'd like to see more of it, then be sure to drop a like and subscribe if you haven't yet subscribed. So in the last update, I discussed how Bitcoin is likely encountering a liquidity grab after it spiked below the recent lows that we had marked here on April 18th. So that's below $38,500 and also below the low that's at $38,200. However, once the price action rallied and it rejected the midpoint of this range, returned back down and pushed back into these prices, the likelihood of this occurring has now obviously been invalidated, right? So if we imagine a scenario where the rally following this potential liquidity grab increased in its overall momentum, then we would have seen Bitcoin break out of this range sometime within a day or two. So what you can imagine is an impulsive rally where the price action, let me just quickly mark this out. So this is where we can imagine that the price action rallies up, breaks above this bearish channel that we've been trading in for quite some time. This would also mark the midpoint of this relative daily range. Again, this range I've discussed many times within the past month. It's roughly between $38,000 and $41,000. So a $3,000 or $3,500 range. So if this were a liquidity grab, again, we would have pushed above this, the market structure would be broken, and we would continue rising quite impulsively. So these impulsive moves, whenever you get them, they're not going to last forever, especially once the volume kicks in, but that's not what happened. So this is where we simply need to change the tune of what the market is presenting us with. And so one thing that's interesting is although the price action did approach the prices down here, which I assumed was a liquidity grab, we're still technically holding up around the low of this range, right? So if I go onto the daily chart, then notice how we did have this bearish candle that closed on April 30th. This closed just slightly below the low of April 26th. Then the next candle opened, spiked below, closed above April 30th's closing price. And ever since then, we haven't had a significant close below any of these recent lows. So what this could simply represent is a delayed reaction where the price action is continuing to consolidate near the bottom of this range before we encounter some type of correction. So now, is the price action still going to push and break above this channel and push above 42,000? We don't know just yet, but when the market structure is ranging so heavily, which for me I can see visually based on the fact that we've been simply fluctuating around these two EMAs. Whenever this occurs, nothing hurts just waiting on the sidelines for more data to come in before jumping into a trade, right? So due to the fact that we're still respecting the bottom of this range, and that's at around 38,000, slightly below, so let's call it $37,600. Since we're still hovering around this region, the market structure, although it does look incredibly bearish, it's still being respected inside of this range. So we would need a strong break and obviously a strong close either on the 4-hour or on daily well below these lows in order to justify that the market structure here is broken and that we're going to continue pushing lower. And there's nothing to say that you still can't get another large liquidity grab before a continuation back up into this range and a rally. However, if we look back on the daily chart, notice how the prices that we're hovering around are areas where we technically already cleared the liquidity that was residing back here on March 14th and March 13th. So this area in itself technically represents a daily support zone that we're hovering around as of right now. And so the next region where liquidity would reside, if that's what was being targeted, would be down here at around $36,000. Okay, so let's recall that this is a region where if I connect this low that was on February 24th all the way up to the high of this impulsive move. And now let me drop down to the 4-hour chart. This region is where we have a price imbalance that still has yet to get filled. So this is a region that currently is about $2,000 away, and that's at $36,500. And who's to say at this point, where if the price action were to drop down to this price, that we can't simply continue pushing lower from that point, right? So you might get a quick reaction and then a continuation of this drop. And then at this point, right, we are technically inside of a daily range, but going onto the weekly chart, this would push us near the bottom of this large weekly range. So now let me just mark this out. So let's recall this weekly range that started during the beginning of this year. We're still hovering around the midpoint of this region. So this is what it looks like zoomed out. And although we do have this bullish channel here and we are approaching the bottom of it, we could get a push down to these prices of $34,000 or lower if we break out of this region. So now back to the 4-hour chart, let's discuss some potential scenarios that could likely occur if the price action rejects the support zone, this daily support zone that's at around $37,500. So again, reminder that the market structure here is still respected as far as the price action goes. So until we get a strong close below this zone and below these recent lows, the price action can still respect this range, right? And if we look at the RSI is still technically diverged away from what the price action is doing, but it is starting to struggle a bit, right? So initially, during the end of April, this trend line was respected quite well, but now it seems as though there's a chance that we can push under it. And we've been respecting the region that's at around 50 or 55 for the RSI for quite some time. So this represents a sign of overall bearish pressure, right? So based on the probable likelihood, the price action is still pretty bearish. So we still can break below 37,500, but what we could encounter first is a continuation of this overall range, and to be more specific, a continuation of this overall bearish channel, right? So a scenario that can play out is where the price action simply rallies and we push near the upper portion of this bearish channel, which would be priced at around $39,500. Okay, so around this region, notice if I look to the left and I mark out the midpoint of this large range that I discussed is between 38 and roughly 41 or $41,500. The midpoint lines up around this region, which previously, let's recall that this acted as support before we broke through it, pushed back up, it broke down again, and then it briefly acted as resistance. Okay, so this midpoint would represent an hourly zone. So let me actually change the colors between the daily zone and the hourly zone. This region, not only would this represent a sweep above these highs that were marked on April 2nd. So anyone that's currently still sitting in shorts that look to sell Bitcoin, they would get taken out of their position. But not only that, you would also respect the prices of any institutions or larger traders that enter their positions up here during the liquidity grab that we had on April 21st, right? So if the bulk of their transactions was residing up here or above 42 or slightly below $42,000, then it wouldn't make sense to retest these prices as long as they're holding on to it, right? And so we technically never retested these prices. And so what this would allow for is for more positions to get added, in addition to the fact that this would squeeze out any recent traders that looked to sell Bitcoin. So we can still get a correction back up to the midpoints, which would also mark the upper portion of this bearish channel, followed by a correction back down, right? We would need to break above the midpoint, so above $39,500 in order for the price action to continue pushing near the upper portion of this range. But if that doesn't happen, then we can simply push up, take out the liquidity that was left here over the past week, and then the price action can continue pushing down. So we simply have a continuation of this daily range, which is not the most exciting thing in the market, but obviously if you're someone who's simply waiting on the sidelines, then that's not a bad option as well. You can simply wait to see if the price action successfully breaks outside below this daily range, so below the lower portion, or you can wait to see if we get a rejection of the midpoint if you want to enter any shorts. And the last position that you could technically play is where you decide to long Bitcoin because we are near the bottom of this range, and technically the market structure here is respected, although it is a bit more aggressive. This can work out as well if you gradually take profit along the way. So that's where you can take a partial take profit around the midpoint, and the second one can be near the upper portion of this large daily range if we do break the midpoint. So that's all for this video. Again, drop a like and subscribe if you enjoyed this, and reminders to check out the links in the description of this video for additional trading guidance as well, or to join my public trading community. So thanks for watching. I will speak to you in the next video.